What is going on, BPO family? Jimmy here with another video in the BPO course series. Okay, so this video is probably the video that everybody wants to get in depth on, and this will be our Fibonacci video. Okay, this is a very good tool to use. I use this tool a lot. Okay, if you are trading with the support and resistance, the supply and demand zones, and Fibonacci as your weapons of choice, then great on you. You guys are actually learning how to trade. It's not crazy. It's not complicated. You don't need all these indicators and shit. So let's go in and let's go over Fibonacci's. Okay. I normally only pull them out on the 1 day or the 4 hour. You'll normally see me use fibs on 4 hours just so I can do a little bit more, see a little bit more than I would be able to on the daily, because instead of just one candle for that 1 day, I can see 6 candles for that 1 day, etc. So just going back, you can pull these up anywhere. And when you're doing Fibonacci's, basically, if it's in an uptrend, you're fibbing up. Okay, if you're in a downtrend, you're fibbing down. Okay, I trade a little bit more advanced fib than the videos I had previously shared from YouTube from Jay Wayne and Jay Take Profits and his Golden Zone Fibonacci's, right? Keep in mind, there are many ways to trade fibs. This is just mine. I used to use his. I used to have my Fibonacci's looking exactly like his, okay? But I have since adapted, overcame a little bit. Fibs is about precision, and where you draw point A to point B, and you have to be able to correctly label and measure the retracement levels, okay? So I know I've already shared these with you guys, but these are my fib levels. If you need them, if you like them, go ahead, screenshot these. Again, from the previous videos, only the ones that are checked. And yes, I know that these are a different color. These are my predetermined stop losses, okay? Because if it goes over 100, whether you're longing or shorting, if it goes over 100, it's a break of structure, and you won't want to be in too crazy long, because if it does, it might go to, the 161.8, the 127.2, etc. So you don't want that to happen, and you don't want to lose a shit ton of money. So we have those predetermined, right? So that was more than enough time for you guys. Let's pull these out. Let's show you guys how to go ahead and use these. So, okay, here's a good one. Swing high, swing low, and we saw a retracement, right? So, like I said, if you're in the downtrend, you will go bearish to bearish, and then I'm going to fib down to my 0. Okay. So, some people might say, oh, well, why didn't you fib down here, Jimmy? Why didn't you put the 0? Oh, shit. That's not where I wanted it, actually. I wanted it right here. There we go. So some people, like I said, some people might be like, well, Jimmy, why didn't you put the 0? Why'd you put it right here? And why didn't you put it down here? Because from our starting point, this is where it did first find support. Whether you see this or not, it found this support, right? Because this is a 4-hour candle, this is a 4-hour candle, this is a 4-hour candle, this is a 4-hour candle. So for 12 hours, it found support at this level, and then it continued. Okay, so this is my 0. This is my ground 0. Right, we had our swing high, swing low. And retracements are very simple, guys, right? So before we continue over here, let me actually try to explain this for those, because I know some of you don't get it, right? So like I said, if you're selling, if you're shorting, you fib in the direction that you want it to go. Okay, you'll fib from, say, your high point to your low point. Okay, this is our candles. We fibbed high to low. So what can happen, and why we use these fibs? Market can do this, right? Right? The market can technically go up to all of these levels, and it can even go all the way up to the 100 and do a full market retest. Okay, so what happens is these are all price reversal zones. Okay, give me 1 second. These are all price reversal zones, so we can expect to see price possibly reverse in these areas, so we always pay attention to them, okay? The 23.6, I don't consider it a major price reversal zone, okay? I consider it more of a speed bump, okay, a continuation, okay, because what happens is, and you guys can look this up, when you have so say we are shorting, you have a swing high, swing low, and you're fibbing, and it comes up here, and then instantly rejects off, it's going to come to either the null 27 or even further down, right? And going back here, right, you guys can kind of see, well, actually, she kind of went up over it, but there's multiple times when this happens. It's more of a continuation of a speed bump or something, right? Now, the higher up this totem pole you go, the stronger the bigger the move down will be, but it's going to be a little bit slower. It's not just going to shoot straight down, right? The further that you go down, the more movement, or the stronger price reversal zone that you get to. So when you get up here, you're going to have a slower slope down. You get what I'm saying? So let's say you make it goes past the 38.2, the 50, like I said in the previous, it's where the market's kind of even. I really don't pay attention to it. So let's say it goes up to the 61.8. Right? It's still going to go. It's more than likely still going to go down. But the move, it's going to be a bigger overall move, but it's going to be slower, right? And it's not going to look exactly like that every time. Sometimes it will dump, We aren't the market. We can't predict. We can speculate on everything. But in the end, the market does what it wants to do. Okay. And then same thing if you were to come up here or up here, on the way down, it would be that even much more, slower of a move down. Right. Could be doing shit like this on the way down. Right. Something like that. You guys can obviously. So, the stronger price reversal zone that you get to, right, you're going to get the opportunity for a bigger move, but it's also going to be a little bit slower. I like to get in these regions because, like I said, we have our predetermined stop losses. We have less room for fuck up here. Okay. Let's find our brush. So say we have a high point and it comes down to the low point, and we see the market retracing, and we say, okay, we want to enter at the 38.2. Best case scenario, boom, right? Worst case scenario, we have all of this room to fuck up in, right? All of this room to fuck up in, okay? And that, oh, that's not what I wanted. May not seem like much to some of you. And these aren't even based on real pips. This is just a very small thing. But even that, depending on where you're fibbed at, if you were to be wrong, say, on like even a move this big, right? And you entered at the 38 and it came out and stopped you at 100 pips, right? And we're not, I know that's not the actual, whatever, but that's just to show you, like, sometimes it can be a lot of pips if you mess up, okay? So the higher you go, the stronger your chance of price reversal, okay? I like to get in up here, right? If I can get in up here, perfect, boom. The 88.6, the 78.6, and the 61.8, those are my sweet spots. Okay, these are nice. Yeah, you can get some pips off of these. You can catch pips in between, all of these different great things. I could go, it could go down here. Let me go ahead, remove all drilling tools. Again, let's say we entered, we had our swing high, we had our swing low. Let's say it did come up here and we caught the speed bump down, and then it came back up here, caught the speed bump down, or you get what I'm saying? Or it came up here, we caught the speed bump down to here, and then we saw it reverse off the 28.36, boom, plow through that. We could have been buying up, up to wherever it goes. And we have our fibs, so we can kind of see, okay, right, if we buy, we see that it passed the speed bump, right? It passed the speed bump. So, okay, it might continue to buy up, right? Let's go ahead and delete this. So say, you get up here, you pass the speed bump, and you're like, okay, I'm going to buy. Boom, you buy up here. Boom. Okay, either TP, or if you see it continuing up, okay, go to the next zone. You can see how high it goes. And if you do these types of things, I'm not saying sauce it up right this second, but you can kind of sauce it up and you can catch it both ways, right? Because I always say we can catch it both ways. You can catch it, if you have the proper analysis, you can catch it going, have it overall the market be in, say, a downtrend, right? And you want to catch a big sell on this from the 88.6, but it's down here by the 38.2, like it currently, this is not the same thing, but let's just say price is here. This is price, and we want to see it retest a little bit higher. We could buy up to that region, and then sell. What's to say that we can't do that? See what I'm saying? So, that's just basic little fib. Like I said, let's just place a couple. Swing high, swing low. All right, we already did this one. Let's just put it back out there. All right. Even setting our fib here, we could have caught sells off 23. We could have caught them off 38. We could have caught them off the 50, the 61.8, and the 78.6, and been very, very profitable. okay, to the TP down to the 78.2. Then this is why I say move stop loss and profit, but y'all always have to give it room to breathe, right? Because say you came in down here, I mean, yeah, you could have took profit and then got back in when it came back up here. But if you want to hold, like if you got to give it room to breathe, because I mean, this whole move you caught 163, like that's one big from the 76 down to the 0.27. It's 160 pips, right? But what you really realistically could have caught, you would have placed this here. You could have caught this up to at least here, but it actually came up here. But I mean, even being low key, you would have seen it come up here. You'd have seen this continue to climb over this. Probably would have let it go, but let's just be conservative. Like I said, put you at the 50. And then you said, okay, it rejected off the 50. So that's 130 pips right there. Keep track, guys. That's 130. I'm gonna actually write these down so I can keep track. Okay, you could have caught that big. And I'm only going to do the big moves. Consolidation, we're not worried about, right? But she stayed right on the 38 too. So we probably could have expected her to try to drop because she respected that zone, right? So let's be conservative and say you got right in at the 38 too. As soon as it crossed it, actually. Let's say you let it cross. You wanted that even more verification. Even if you wrote it down to the 0 and not to the 0.27. Being, again, very conservative. You could have caught another 50 to 100 pips. So I'm just going to write down 50 to 100. So now, and this isn't very long, y'all. Right? From the 3rd to the 12th. So in 9 days, you could have caught 200, anywhere from 230 to 280 so far, right? And y'all would have obviously, I mean, in using the same fib, you would have seen it instantly reject off of here. Even if you got back in at the 0, again, being very, very conservative, you would have seen it plow through all of these regions and say you buy up a little bit below the 78.6, be conservative once again. So boom, there's another 120 pips, right? You see price reject up to 78.6. This is a much stronger price reversal zone, right? So say you are conservative once again and you get in below the 78.6. Right? You can take profit anywhere. You could take profit down to here and catch 40. Could have took it down to here and caught 55. Took it here and caught 78. Or ridden it for the full 113. Okay? And then again, so that's another 115 pips, right? Trying to keep track of this. Oh no, we already wrote that down. We wrote down 120 pips. Okay. You see it come back down to retest the bottom again, and it instantly rejects off. So say you're conservative, get a booty entry. Could have wrote it up here, caught 35 pips. Caught 52 pips. Caught 70, 80 pips. Right? So we'll just put 70. See it consolidate for a little bit in between these zones. Why not catch one more final rejection, right? I mean, you could have bought here and still, or sold, I'm sorry, here. Still caught another 100 pips, right? If you would have actually sold back up here around the 50, being very conservative, saying you got a booty entry. Writing it down. What? Another 75. We're from 75 to another 120 pips. All right, so let's just do 120 again. So in a matter of one Fibonacci, one swing high to one swing low, from the 3rd of September to the 27th of September. We'll do it here. 27th. No, we'll do it here. 25th. So in 22 days, just off of this one Euro USD chart, which is a major pair, everybody's like, oh, you can't make money off of a major pair. Let's do the math. 130 plus 100 plus 120 plus 70 plus 120. That's 540 pips. Being very conservative with our pips and saying you had booty entries and saying that, you got in late, you got in this and this, doing the low amounts instead of the high amounts off of one pair. Okay. Now imagine getting good with these and being able to do that with 2 or 3 pairs a month. You can make 500 pips off of 2 or 3 pairs a month. Okay. That's all y'all have to do. You don't even have to make that many pips to change your life. Okay. But I like these bigger movements. Why? Because they build character, for one. It teaches you the actual skill. If you're looking at the bigger time frame, you're not getting lost in the sauce by looking at this. Right? There's a lot more going on, a lot more to be scared about. Right? Or, I mean, if you're one of those people, go even further with it, right? I'd be super scared if I was sitting here watching these candles go crazy on the 15-minute chart. I mean, depending on entries and stuff, yeah, sometimes I even look at it 4 entries to get super sniped. But structure-wise, nothing will beat the 4 hour or the 1 day. And you can literally let your trade ride, use proper risk management, set stop losses, and say you saw the big, you got worried about the big move. Okay, what's to say you can't use this as a stop loss or this as a stop loss? You don't have to set your stop losses all the way back here. Okay, sometimes I'll get in at the 50 or the 618, and I'll set a stop loss right above the 78.6. So if it goes above it, okay, I can try to get a better entry. Or say I enter at the 88.6. Sometimes I'll set it right above the 100. I won't set it all the way back here because it looks like, oh, hey, it possibly could break this structure. Sometimes if it still looks like it's in my favor, I'll extend my stop loss, even a little bit further. I try not to because I can always re-enter, get a better entry. But you get what I'm saying, right? So, there's that. It's just like, look at a few. Let's see right here. Right. Level of support. And for fibbing up, bullish to bullish. Right. And then you can catch, if say the market direction is an uptrend, here's a way to catch buys, right? You have your base, you go up, hit 0, pings back off, right? It did go speed bump, retest the speed bump, but it did shoot down further. So, again, this is 18th. So this happened. And then once we started to kind of see it come back down, I would have probably thrown out a fib and be like, okay, let's see this bitch retrace. And you can see her, coming back, hit that. She came back, hit the 38.2. So, I mean, you could have sold to this. Oh, that's not what we wanted. How do I push the button? We could have sold down here. Again, let's even be conservative. Let's be conservative and say you took profit at the 50 because you're greedy. Greedy with the profits, as you all should be. Okay, you catch 75 pips. Okay, and you didn't even want to get in down here. You want to see how far it would go. You saw it reject, come back to the 50, reject the 50, go back, retest. Right? You see this? Right? Come on, So you got back in at 61.8 and rode it. And then you got another 90 pips, right? So in the matter of, that was a week. That was 2 days. So in like from start to finish, you're looking at 2 weeks or so. But you guys have a skill, right? You'll be able to see these on every chart. You can make money off of every chart. We're just using this one for these videos, right? So think about that, y'all. That is how I fib, just the basics of fibs and everything, and what you're looking for. And even with the uptrends, it would be the same thing, right? You come down. If you hit this, it's a speed bump. The further you go down here, right, it's going to be the opportunity for a bigger move in these higher price reversal zones. But going back, it's going to be slow and steady. You know what I mean? It's going to test your patience sometimes. Not saying that this happens all the time. Sometimes you can see it ping up to 78.6 and just shoot. You know what I mean? But a lot of the time, the higher price reversal zone that you guys are going up to, the higher the likelihood that you see slower movement back, right? And I could sit here and do this for, right, up until like the 12th or the 13th or the 14th or some shit, right? Like it could take 2 more weeks, if you bought down here, it could take 2 weeks for it to get back up here type shit. But what's to say you can't catch that one big move and then you catch all the little moves, the 20s or 30s in between, right? Boom. So there's that, guys. That's the basics of fibs. I'll see you guys in the next video.